Well, after all the drama which the Nifty showed us over the last two trading sessions, today was more of taking a break. Um, the benchmark Nifty index in today's session was down just 43 points, just 43 points, considering it was up more than 500 points yesterday. Also considering it was down more than 500 points the day before yesterday. In fact, this week has been quite a roller coaster. I'm sure it was for you as well, traders. Good evening. 16th of Feb 2022, 15 minutes past 8 p.m. Indian Standard Time. And we are looking at two charts side by side. On my left hand side, I will maintain the weekly time frame just to have a slightly larger perspective. And on the daily time frame, right now, I have the daily chart, which I will change it to 75 as we talk about the price behavior in today's session. So, um, yesterday, we spoke about 350, 450, 550 kind of zone, if you remember, right? So let me bring that into perspective. So we spoke about 350, 17,350, 450, and further up towards that 500, 550 mark. Now, today, the index comes close to this particular gap, this particular gap over here. We had a pretty decent gap down. This was on Monday session, and it did face a bit of resistance, which led to this last hour of sharp correction. If you bring in the short-term momentum indicators, you will definitely be able to recognize a divergence, and so this led to this fall to end the market down 43 points. So resistance kicked in more or less in anticipated zone. Now the question is, are we going to see a follow through on the downside or not? Well, my guess is as good as yours, but considering the fact that even on the daily time frame, the underlying trend is still very much down even now. It won't will not be a surprise if it drags itself further down. See, what happens is in this kind of a market with such sharp down days and bounce back, what the index essentially does, it creates important levels. It creates a very important supports, and what it does after that, it may just stay within that zone with the entire street marking 16,800 as the make or break and all those. It gives the trader, the investor, the speculator some level to work with, or like me, some level to create videos and share my views. So considering the daily moving averages are turning pretty down, they're opening up. MACD also not much signs of any kind of positivity per se. Not really, apart from the slight slant that we have, but overall, I would say 70, 30, 60, 40, 60% on the downside, 40% on a surprise move on the upside. Because metal, private bank, PSU bank, bank Nifty are still in an uptrend and showing signs of possible rally. And if that happens, then yes, that's it's there. It's there on the cards. Possibility is there. But then on the flip side, as we've been saying all over again, that there are sectors like IT, pharma, and real estate, media, which are weak. So we stay in this kind of a market environment where it makes sense to be cautious, careful, and yes, if we fall from the current levels and if the market breaks today's low, then yes, from an intraday perspective, the possibility of follow through selling is very likely. Considering expiry, weekly derivatives expiry tomorrow for the index, 17,500 should definitely have had a great big call writing. I've not checked it, but I can guess that. And similarly for the bank Nifty, it should be a decent amount of call writing at 38,500. Now, Bank Nifty is much better off compared to the Nifty. Number one, the Bank Nifty weekly chart still looks pretty decent. I call this a decoy bar, what we have today. So for the Bank Nifty, the trigger is today's high. However, if we take a look at the 75-minute time frame of Bank Nifty, then it's not a good close. You can clearly notice the similar kind of a negative divergence over here, and the index manages to face resistance right at its previous lows. Now, when erstwhile lows becomes current highs, this is a very strong bearish sign signal. So any break below this level yesterday and sorry, tomorrow, I'm sorry, then you're heading for further downsides. Volume profile, quick check on this run up for the bank nifty, and well, it's not coming up. Okay, there we go. So you can see some signs of redistribution, very, very evident up there. And a quick volume profile of this recent sell off. And you can see it's the resistance that we were talking about yesterday, 38,500. So as of now, both the indexes played off pretty well as we were discussing yesterday, and early signs of selling. Um, Will this extend further? My guess, looking at Bank Nifty, is highly possible. Let's quickly take a look at the global markets. And Well, the US markets are down close to 1% for the Nasdaq and 0.5% for the S&P 500 and Dow Jones. European markets are all 0.5% down. Your SGX Nifty is down 45 points. Crude picks up again, 93 and a half almost, and gold stable. Um, So these kind of global cues are suggesting some kind of a weakish opening tomorrow morning, but it's too early to comment on that. But I would like to, comment on one stock per day. I would love to do that, and I'll talk about HCL Tech today. Um, the weekly daily combination, I don't want to get into too short term views. And so I will take a look at HCL Tech from a slightly medium term perspective. There you go. Takes a little time to open up. Left hand side is my weekly chart, and right hand side is the daily chart. Now, what I can notice very clearly from HCL Tech is after the sharp sell off that the stock went through, that is this one, we had a bounce back. Now this bounce back is essentially, creating some kind of a zone over here. Now what we would like to do is we would like to take a look at the volume profile of this bounce back. As of now, we would like to see if there's any sign of redistribution, which is there. We can see some decent amount of volumes. Now, when the stock stays in a range, a point of control will definitely come here. Now, we got a decent volumes down here also as it was selling off. A quick volume profile of this entire sell off, the recent sell off which HCL Tech went through. And we can see up here, nothing much. Um, Now, where we are right now, um, if you want me to take a look at HCL Tech's line chart vis-a-vis the behavior of RSI, not much cue I can get from at this juncture from that comparison. But the Heiken Nashi, which I pay a lot of respect to, suggests in the short term make or break for the stock, at least in the short term for sure. And it will be below yesterday's low and or above today's high. The Hakanashi in today's trade has turned bullish. Day before yesterday, it was strongly bearish. I don't blame HCL Tech for that. Overall market was such. But considering my focus is these three bars, and considering the way this is taken a shape, keeping in mind that HCL Tech is in a downtrend and there's a short-term bounce back post the downtrend. We have signs of redistribution. Momentum on the higher time frame is not that supportive. We've got good supports here at this level. So early signs of trend reversal. Moving average is turning down. So look for this breakdown. I would say 70%, or look for this breakout, I would say 30%. So we will see how it plays out. I am betting on a 70% probability of this stock breaking down. It always played off well for me in my career. as a research analyst earlier and then as a trader investor is staying with the trend. And so let's see. It's got a chance of an upside breakout considering this is a decoy bar in my typical technical parlance. We'll talk about TCS also, but today's video I would restrict myself to HCL Tech, which I feel is currently in a make or break level. This is the near month futures of HCL Tech, and yesterday's low is 1149, and today's high is 1181.65, so 1182. We'll keep a close look at it. I would request you to share your views if you have created any on the overall markets or HCL Tech or the entire IT pack per se. So it was a time pass of a day. It was a break day for the index and the not the overall markets, but primarily for the index. The trend is down. We have had resistances from anticipated levels. Index did sell off sharply in the last hour or so, and US markets, European markets are mildly negative. SGX is down 45-50 points, and so a break below today's low can see us at further lower levels tomorrow. Expiry of derivatives weekly contracts, and if you notice 17,500 huge call writing or 38,500 huge call writing, then high chance we are going to stay down in at least for the major part of tomorrow's session. Who knows? Let's see what's in store. Till then, take care of yourselves, trade well, and trade wise.